Well, good afternoon everyone, and welcome to our webinar today looking again at gender pay statements. To be absolutely honest, it's not the most exciting topic, we do admit, but it is one that is quite complex and it does need to be addressed. So I will be doing my best during this webinar to keep it useful and informative, and I also hope that in addition to the theory you're going to pick up a few practical tips or things to think about as we run through the slides. Next month, as you're probably aware, sees the first snapshot date. That's the 5th of April 2017. Want to have a big, bright red cross around because this is the date upon which private and voluntary sector employers will determine whether they meet the 250 employee threshold for gender pay gap reporting. And it's also the date upon which their first pay data report will be based. We did run a webinar a year ago on gender pay statements, but a number of changes have taken place since then. So this webinar goes through everything again in full from the beginning, but including the changes as we go. So first of all, my name is Alison Blackhurst. I'm the HR Knowledge Manager at HR Solutions, and I'm joined today by my colleague Sue Watson, our HR Operations Manager. Hello, Sue.
Hello Alison. Hello everybody. I'm here just to try and make sure things keep going technically, but also to field any questions you may have. Please do send them through. You have a panel that you can have a chat message with us or send in questions. So I'll try and respond to them during the webinar, or if we don't get chance during the webinar, we will certainly respond to you afterwards. So please do send them through. Thank you. I'll hand you back to Alison.
Right, okay. Well, in that case, let's launch into gender pay gap reporting. So we now have the final regulations, the snappily titled Equality Act 2010 Gender Pay Gap Information Regulations 2017. And these come into force next month on the 6th of April. And they will apply to all private sector employers in England, Wales and Scotland who have 250 or more employees. Northern Ireland will have similar but separate legislation. And a separate set of regulations will apply to public sector employers of the same size, and I'll say a little bit about that at the end. Now, there are some significant changes to the final regulations from the way they were originally. So as I said, this is quite a technical webinar this time, and we will be going into some detail here. Please do bear with me on this. I will do the best I can to keep it lively. So gender pay gap reporting, what's it all about? Well, it applies to employers with 250 or more employees, and we'll look at the definition of employee shortly because it is now wider than you may think. And these employers will have to publish the pay differences each year, concentrating on the payments that they've made in April and also any bonus payments that they made over the previous 12 months to April. Now the dates have changed, so what we are looking at now is what you pay to your employees on the pay period, which includes the 5th of April this year. And we're also looking at any bonuses that you've paid them in the previous 12 months to April. And then you will do this each year going forwards if you're caught within the 250 threshold. So the snapshot date is the date which is used to assess firstly whether you meet the 250 employee threshold, and it's also the date on which the data must be gathered. And that's the 5th of April each year. Now I'm stressing that for the simple reason that it was the 30th of April originally, and if any of you have already prepared provisional figures, then you do need to check that you're actually working to the right date, and also if you are relying on any out-of-date guidance or information that talks about the 30th of April, that is not correct. It's now the 5th of April. And employers will be required to publish their first gender pay gap reports in respect of their 2017 data, so this year's data, at the latest by the 4th of April 2018, based on the pay periods that include the 5th of April 2017. And in the case of the bonus payments, we're looking at bonuses that were paid between the 6th of April 2016 and the 5th of April 2017. Now, what are the implications of the change of date? Well, if you pay all of your staff monthly, then effectively there are no changes because the relevant pay period is still going to be April each year. But if you have staff who are paid weekly or fortnightly or fortweekly, then if you pay any bonuses or allowances at the beginning or the end of the month, it may affect your data. Simply because if you pay the bonuses at the beginning of the month, these will now be included in the pay data. And let's not forget it is the beginning of the tax year as well, so often a time when annual allowances, one-off payments for things like clothing allowances are paid. Yep. And these payments would previously not have fallen within the pay period if it was the one that contains the 30th of April, and vice versa. We have a year in which to prepare and comply before you have to publish the figures, but of course you are going to be including data on bonuses that have already been paid. And your gender pay gap report must be published on your website and remain there for 3 years in a searchable place. Now, it is slightly different from modern slavery statements in that they have to be prominent. There is no requirement that your gender pay gap report has to be prominent, but it does have to be searchable. And what that means is that people such as job candidates, your own employees, shareholders, union representatives, any trade bodies, your competitors, and also the media will be able to see your gender pay gap and also any progress that you have made or otherwise against this. So just a quick recap to look at what this is all about. The gender pay gap, well, the ONS said that we had a gender pay gap in 1997 of 27.5%. That's the difference between what men typically get paid and what women get paid. It has reduced over the years. It went down to 19.2 in 2015, so a gradual decline, and it's now in 2016 it went down to 18.1%. So you can see that things are getting better, but only very slowly. Now the figure for full-time employees in 2016 was actually 9.4%, so significantly less. The overall figure is worse, which suggests to me that part-time employees widen the gap. But interestingly, when it comes to gender pay gap reporting, we are not required to report on part-time employees separately from full-time employees. We did wonder here whether the national living wage may help to close the gap because by increasing earnings at the lowest end of the pay spectrum, where there do tend to be lots of women, that could actually help to close it going forwards. But what is interesting is the huge disparities that occur across the UK. And if you want to be in an area as a woman where the gender pay gap is not too bad, then you don't want to go to Clackmannanshire in Scotland, because that is the worst place to be, with a 37% pay gap between full-time men and women. Essex, Uttlesford in Essex had the next biggest gap, followed by Allerdale in Cumbria. But we have to think, well, what is the reason for the gender pay gap? And can much of this actually be attributed to variances in seniority and sector and function, which are actually for justifiable reasons? Gender pay is not the same as equal pay. Big misconception if you think it is. Equal pay was first introduced back in 1970, so 46 years ago, and it now falls under the Equality Act 2010. And basically what that said was that a man and a woman who are doing the same work or work of equal value should receive the same pay. And if they didn't, they can go to tribunal and awards can be made for up to 6 years back pay. Now, a lot of the cases, the equal pay cases that have gone to tribunal have been very complex, and employers do need a proper job evaluation system to actually defend them robustly. There have been some very, very expensive settlements because a lot of the equal pay claims have been multiple claims, often in the public sector, and also, interestingly, supermarkets. I'm not sure why supermarkets, but they have hit the news quite a lot in terms of equal pay. This is not equal pay. This is entirely different. So as an employer, you may well tick all of the boxes for equal pay, but you still could have a large gender pay gap unless you have a pretty even gender spread across your pay range. And if not, the question is there a good reason for this? So the gender pay gap is the difference between what men actually earn and what women actually earn. So if you have all men at the top of your pay structure and women at the bottom, or vice versa, then you have a big gender pay gap. So you can see it's a completely different concept to equal pay, because it asks the question, if we have a large gender pay gap where all of the senior and the better paid staff happen to be men or women, why is this? And therefore, because the concept is a different one, then the solution's a different one as well. It's not simply a case of carrying out an equal pay audit, it's a case of looking to see why you don't have women or men at high levels in your business. And is this their choice, or is it because your system prevents them from progressing higher? Particularly if, for example, you take in a lot of graduates or trainees, and they all come in at the same stage and they all have the same qualifications, and you would expect them to be progressing through your organisation at the same sort of rate, and then you'd suddenly discover that the women get so far and go no higher. Why is that? So first of all, let's look at what you actually have to do before we talk about the what we might want to do here. To whom does it apply? Well, it applies to employers in the private and voluntary sector, in England, Wales and Scotland, and it's those that have got 250 employees as at the 5th of April each year, so 2 weeks' time. Yep. Employers includes partnerships and LLPs, etc. But if you're part of a franchise, then you may well find that you actually don't come within the scope of the regulations, because each franchise in a franchise arrangement will be regarded as separate rather than being aggregated. And similarly with group structures, you may appear to the rest of the world to be a very, very, very large employer, but if you are structured in such a way that you have separate companies in a group, then each one will be regarded individually. So as a whole, you may be a larger employer, but if you've got lots of smaller separate entities, then you might find that you actually don't come within the scope of the regulations. Now, it's those with 250 employees, and employees is all of those who work in Great Britain and whose contract is covered by UK legislation, but employees goes a bit further than you may think as well. Now, employees, the definition of relevant employees for whom the data has to be produced has changed, and this now uses the broad definition used in the Equality Act. So yes, it includes those who work under a contract of employment as you would expect, and yes, it includes all of your apprentices also as you would expect, but it also includes workers, i.e. those who are required to provide their services personally. Now, these people were previously excluded, but then it was pointed out that this ignored an awful lot of low-paid, zero-hours workers, many of whom were likely to be women. So the plans were changed and workers are now included in the figures. But workers are not, of course, just at the lower end of the scale. They can also be at the upper end. So contractors or consultants who are used to provide their services personally, they will count towards your 250 employee threshold. Those who work outside of Great Britain would not be counted. Truly self-employed people would not be counted. Partners in firms, including LLP members, don't count, and those in sister companies don't count. And agency workers will be reported on by the agency that actually employs them. Now, there's a bit of an anomaly or a slightly unusual situation regarding workers in that they count towards the 250 threshold, and it's very easy to see if they're there or not, yeah. But when it comes to preparing their pay data, then there is a new exception which allows employers to exclude the pay data for those workers if they don't have the data and they can't reasonably obtain it. Now, that would apply in respect of contractors who send you an invoice, they don't work fixed hours, they don't give details of time worked, they're not on your normal payroll system, and you ask them maybe to come on site and provide training courses for you or something like that. So you actually don't know how much time they're spending preparing the material as well as delivering it and talking to people afterwards and things like that. If you can't get that data, then you don't have to include the pay data towards the rates of hourly pay. So what do we have to include in our gender pay statements? Well, it's 6 pieces of information, and they are simply figures. Yeah? The first are the differences between the mean and median gross hourly rates of men and women. Now, I know we've got some finance directors listening in today, so apologies if I'm telling you things which are so simple, but a reminder for the rest of us that the mean is basically gathered by adding everybody up together and then dividing by the number of employees, whereas the median is the most popular rate. And a lot of people feel that that may be a better indicator because it disregards the extremes at either end of the pay spectrum. Now, in addition to the gross hourly pay, the mean hourly pay and the median hourly pay, we also have to include the mean and median bonus payments made over a year. Now, the median is a new addition. It wasn't in there before. And we're looking at bonus payments made over the whole year, but only to those who are still in your employment as at the 5th of April. So you would take out the details of anybody who has left beforehand. We also have to look at the proportion of men and women that received a bonus over that time. And finally, we look at the number of men and the number of women in each quartile of your pay distribution. So 4 bands, A, B, C, and D, with A being the lowest paid and D the highest. It sounds simple, it's not quite as simple as it sounds. So let's have a look in a little more detail as to how we actually calculate these. Now, to get the first one, the mean gender pay gap, the first thing you will have to do is to work out what people are paid in April, because we need a gross hourly pay rate for each employee. Now, the definition of pay is the same one as used by the Office of National Statistics in its annual survey of hours and earnings, but there are some important changes from the original proposals. So you would expect pay to include gross pay, holiday pay, allowances, shift premiums, yeah? But we now add bonus payments in there, which we didn't do before, by the way. And we also do not include overtime pay or expenses or any other payments such as non-cash benefits. Now, I said before about workers that they were included in the threshold calculation to see if you hit the 250 trigger, but you can exclude your workers from the pay data if you don't have that and you can't reasonably obtain it. And you also will need to exclude an awful lot more people who you might think should be included, because we are now looking only at those who are on full pay, not those who are on reduced or no pay. So the chances are, if you have 250 employees, that you are going to have employees who are off sick, who are on maternity leave, paternity, adoption, shared parental leave, who might be undertaking a phased return to work. You might even have people on special leave such as jury service, for example. Now, if these people are not on full pay, then their pay data should be disregarded when you're working out the hourly pay. If you have employees who are on leave but they're on full pay, they should still be included. So you're going to have to make quite a comprehensive check. It's not just as simple as removing everyone who's absent from work during the relevant pay period. Now, pay also, the definition of that has changed because it also includes any bonuses that have been paid in that pay period. But clearly, if you pay an annual bonus at the beginning of April, then that could distort your figures altogether if it's a large amount. So what we would do there is only a share of the bonus payment that applies to the relevant pay period should be included in the calculation of gross hourly pay. And the government's given us some very, very precise way of working that out, actually, in that if you pay an annual bonus, you divide it by 365.25 to get a daily rate, and then multiply it by the length of the relevant pay period. And what I mean by that is, if you pay weekly, you would multiply the daily rate by 7. But interestingly, if you pay monthly, and it's April, then it's actually 30.44 days, not 30 days. Now, any benefits, any remuneration that's provided otherwise than in money is excluded. So if you give your employees the chance of having either a car allowance or the provision of a car, then those that have the provision of a car, that would not be included in your figures, but the ones that opt for the car allowance, that allowance would be included towards their pay. And we also have guidance on how to calculate the hourly rate of pay. And basically, where you have employees working the same regular normal contracted hours from week to week, then you would simply use those hours. If their working hours differ from week to week, or they don't have any normal working hours, then you would look at a 12-week reference period ending with the last complete week of the relevant pay period. But we also have a final alternative as well, an interesting one, and this is that employers may use a number which fairly represents the number of working hours in a week, having regard to, and I'm quoting here, the average hours worked by that employee and others in the same role. Now, what does that mean? Basically, what it means is that you can use an average day which is longer than contracted hours but reflects the typical hours worked. Now, that is going to result in a corresponding decrease in the hourly rate, obviously, and therefore it could affect the gender pay gap in organisations where you have senior staff who are predominantly men, let's say, and who work lots and lots of additional unpaid hours, because that will bring their hourly rate down. Hours for which an employee is paid overtime should be excluded from the figures. Now, this is all quite complex, so you're probably understanding now why I was saying this is not easy stuff, because you're going to need a way of collecting all of this, and it's probably not as straightforward as looking at people's pay slips, unless you are super duper itemized and you have everything totally itemized separately on the pay slips, because things like expenses are typically shown separately on pay slips if they are paid through the payroll, but other than that we see lots of pay slips which actually do not split payments out. So the payment may well include overtime pay. Well, that's going to have to come out. Yeah. Some pay slips might include pay arrears or pay for a different period. For example, if your pay review is late and you're including some backdated pay, you're going to need to take that out because that shouldn't be paid in the relevant pay period. If you have salary sacrifice arrangements, for example, for pensions or childcare vouchers, cycle to work schemes, things like that, then the pay you would use for those employees should not include the value of any salary sacrifices. So the salary that you would want to use if you were comparing them against other people to check they were getting a fair deal is the overall package, but in this particular instance you're not looking at their gross pay before the salary sacrifice, you're looking at what they actually get paid after the salary sacrifice. Now, we work out the gross hourly rates per person, and then what we're actually aiming to do is to compare an average hourly rate for all women and an average hourly rate for all men in that particular pay period. So if you pay monthly, obviously your pay period is going to be the whole of April. If you pay weekly or fortnightly, then the pay period you use will be the one in which the 5th of April falls. And of course, a lot of larger employees are going to have employees in both of these camps. Yeah. It doesn't matter if the employee is part-time. No difference there. We're looking at full pay, not full-time. 0 hours workers who don't earn anything at all would be excluded, but if they get paid anything, they would be included. And casual workers who get their normal rate of pay would also be included. And this figure, when you get the difference, does not have to be broken down by role or by hours. So you don't have to give different figures for full or part-time workers, and you don't have to give figures for different parts of your organization. It is one figure. So let's have a look at a quick example. This is completely hypothetical, and I'm not going to work through it in detail. You're welcome to have a look at the slides if you want to work it out yourself later on. But let's take an employer that has 260 employees with 100 women and 160 men. You would look at what the women earn, first of all, add it all up and get a mean average, and in this case you have people earning from £20 an hour down to £8 an hour, but the mean average is £9.80 for the women. With your men, you've got some who are earning as low as £8 an hour. You also have some right at the top of the scale earning £30 an hour. You would add all of that up and get a mean average. In this case it came out to £15.81 per hour for men. So your gender pay gap would be taking the pay for men, taking the pay for women away from that, multiplying it by 100 and dividing it by the pay for women to give you a percentage. And in this instance, the mean gender pay gap here came out at 38.01%. That's quite high, So maybe you might be starting to worry at this point if that's the figure that you came up with. Now I can explain the median a lot more quickly, basically because the definition of pay is the same and the pay period is the same and the sort of employees that you should include are exactly the same as well. And what we're looking at is the difference between the median gross hourly rate of pay for men and the median gross hourly rate of pay for women. And this is thought to be a better indicator of the difference because it avoids the skewing effects of a few very high or very low earners. So if we take the same example that I had before, to find the median for the women, we would look at when employee number 51 sits on the spectrum and that person was earning £8 an hour. And then for the men, we would look to see where the person between number 80 and 81 is, and that was £14 an hour. So if you look at the women in my example, there are a very small number at the top of the earnings range. If you look at the men, you have a few at the bottom and also a very small number at the very top, but in a range where there are no women. And what that comes out with in terms of a median gender pay gap is actually significantly higher. That came out at 42.86%. That's gross hourly pay, median and mean hourly pay. Let's turn to bonuses now. These are items 3, 4 and 5 on your on your 6 points that we have to cover. Now, we're now looking at bonuses that are paid between the 6th of April 2016 and the 5th of April 2017. And bonuses are traditionally an area where men have done a lot better than women. The national gender bonus gap is 57%. Originally, the regulations asked us just to produce mean bonus payments, and now we're required to publish the difference in both median and mean bonus pay, so in line with the hourly pay gap figures effectively. Now, bonuses are what you would obviously think of in terms of performance-related pay and commission payments and things like securities as well. And securities options and interest in securities are to be treated as paid to the employee at the time and in the amount of which, in respect of which they give rise to taxable earnings or income. So I said before about the adjustment that allows you to take out employees who are receiving reduced or no pay during the snapshot month, when we're working out hourly pay. That does not apply when we're looking at bonus data. So your bonus data may still well be skewed by employees who are temporarily receiving lower rates of pay. And to give you an example of that, let's say you had a 50-50 gender split of sales staff and they all receive individual performance bonuses based on targets. And generally speaking, your scheme is quite fair and your male sales staff tend to earn the same sorts of bonuses as your women. But if you have a high level of female staff who are absent on family leave and therefore they don't get much of a bonus in that year, then your figures may not look so fair, even though on the face of it they may be. And it's in instances like this that you might start to think, I think I need to give a bit of explanation on some of these things. Yeah. One thing on the bonuses though, as I said earlier, you do remove people who have left. So we're looking at bonus payments made over a whole year, but only to people who are still in your employment as at the 5th of April. Now, the final piece of information that has to be on the report is the number of men and women in each quartile of your pay distribution. And this is probably the most difficult to calculate, and it could well be the most damning if you have a very, very large gender pay gap. And the guidance is very specific. It confirms that this figure should be calculated by ranking all of your employees in order of their gross hourly pay, so from the lowest to the highest, and then splitting them all into 4 equal-sized groups, so the same number of employees in each group, and then expressing the proportion of male and female employees in each of your 4 bands as a percentage. And where there are a number of employees who receive the same hourly rate of pay, so they straddle more than one quartile, then an employer should aim to ensure that the relative proportion of men and women is the same in each pay band. Now, if we look at my example, this is what we come up with. It might be easy to explain in theory. It took quite a lot of time to do it, even with hypothetical figures, I have to say. Yeah? So don't underestimate how long it's actually going to take for you to get these figures together. The government thought that it would be 4 hours for training to become familiar with the regulations, and then 4 to 8 hours to train HR and payroll staff, and just 13.5 to calculate. But I think it's wildly optimistic unless your payroll systems are very, very sophisticated and they're already set up for this data. But this is what we came out with, and when you look at the chart showing the bands A, B, C and D and the number of women and men in each one, to be honest, that didn't mean an awful lot to me just looking at the bald figures. So what I did was I put that into pie charts because I thought that gave me a more visual impact as to what those figures actually meant. Now, grey is women, and the HRS pink happens to be men, just to be non-traditional in this today. So band A, lots of women in the bottom band if you have a look, not too many men. Band B, a more even split actually, yeah. Band C, all women, absolutely no men, yeah. But band D, which is the higher earners, very few women at the top. Now, in an organisation that employs 100 females and 160 men, you've got roughly 60% men and 40% women. So if you don't have much of a gender pay gap, then you might expect to see those percentages reflected across each band. Now, you don't have to show your figures diagrammatically. All you have to do is actually give the figures. But this is just to emphasise the point, because this example doesn't look too good, actually. It wasn't done deliberately, by the way. It was I came up with them all hypothetically, and this is the way that they actually worked out. But I'm glad it made the point. Now, once you have your figures, they must be published and they remain on your website for 3 years and need to be accessible, as we've said before. They must be signed by a senior person and they must be in English. And also, as well as putting them on your own website, the Secretary of State is going to designate a website to which all gender pay reports must be uploaded, including the name and the job title of the person who signed the statement. It remains unclear at this stage whether the government is going to use this data to create sector league tables. That was originally suggested, but there's been no development on that. So what happens if you don't do it? Yeah. Well, the Equality and Human Rights Commission can take action, so it can investigate employers who failed to comply, but currently there are no other civil or criminal penalties for failure to publish your gender pay gap, although EOC action might indicate the future risk of an actual penalty coming in force, but at the moment there is nothing other than risk to an employer's reputation. So we're not in the business of recommending that people do not comply with any legal obligation, but clearly there are going to be some employers out there who actually say, well, I'm just not going to do this. I am not going to publish. And the sort of things that they will be thinking of when they make this decision is, what is the likely damage to their reputation of publishing these figures? If they're pretty good, then is there a recruitment or retention advantage of being towards the top of a league table for a particular sector and really being able to make a good song and dance about how good you are and therefore use it as an aid to recruitment and retention? Are you likely to have pressure from the media or unions or employees on this, or any trade bodies, for example? And these sort of things could well be a more powerful incentive for change than the threat of legal penalties in reality. We suspect that there'll be quite a lot of employees using a new government tool called Find the Gender Pay Gap for your job, because they'll be looking to see whether they're in the right sort of profession or not in terms of gender pay. And of course that may well affect some people's thinking when you're guiding your own children and school leavers and university graduates as to the sort of sectors to work in. If you happen to be women and you can see that the gender pay gap is pretty terrible in the area that you are considering working. So it will be interesting to see the effect of the figures. Now I'm just going to very, very quickly mention public sector pay gap reporting, because I don't know if we have anybody from the public sector here with us today. But the government has now published the regulations that will apply to them. And these extend the duty to publish annual gender pay gap reports to public sector employers with 250 or more employees. Now, these take effect from the 31st of March 2017, and they are very, very similar to the regulations that apply to the private and voluntary sectors. The main differences are that, first of all, the public sector duty is part of an existing equality duty. It's not just a standalone requirement like it is for private sector employers. Their snapshot date, I don't know why, is different. We have the 5th of April as a private sector employer, but the snapshot date for public sector employers is the 31st of March. So they will have to publish their first reports no later than the 30th of March 2018 for the pay period, which includes the 31st of March 2017. And unlike private sector employers, public sector employers are not required to include a statement from a senior member of their organisation confirming that the information is accurate. Otherwise, we're looking at pretty much the same thing. Certainly the way in which we work out the hourly rates of pay and everything like that are all the same. So where on earth do you start with all of this? Yeah, it's going to be fun, isn't it, working these out? Yeah. First of all, check your preliminary figures. Look at the date change and amend your calculations if you'd done preliminary figures beforehand. If you did this earlier, you would have based all of your figures on the 30th of April. But you should now be working to the 5th of April, or if you're in the public sector, the 31st of March. Have a look at your head count. In 2 weeks' time, are you likely to have 250 or more employees, including workers, because we now need to make sure that they're included. Therefore, will you be required to publish your data? Now, as I said earlier, large group organisations might find that they're not subject to the regulations because the figures are for each independent subsidiary and there's no obligation to aggregate them. Some might actually move people across into different parts of the group if that would actually keep everybody below the 250 threshold, but that might actually, is that really worth the effort because there are other implications to doing this. Some group organisations might decide that they're going to publish for all of the component parts of their group because some of the companies within the group might fall within the threshold and others are below it, and they take a decision that they're going to include the figures for everybody. Have a look at your workers. Do you have any workers? If so, add them into the pot, but then see if and where you have any legitimate gaps, i.e. if you've got insufficient details to base your pay data on. Then you need to think, well, going forwards, should we be amending our terms of business with these workers so that they are actually required to supply you with a detailed breakdown of the hours worked rather than just sending you an invoice? Because that might be particularly appropriate if you have enough of these types of people that their omission, the omission of their pay data, results in a misleading pay picture for the rest of the organisation. Have a look at your payroll systems. Most of these will need amending in some way in order to provide the required information. So do they clearly flag up employees who are on reduced or no pay during the snapshot pay period? Because these folk are going to have to be removed from your hourly pay data, but not the bonus data. So we're looking at taking out anyone who's on an SSP for any part of the snapshot pay period, anybody who might be on a phased return to work and therefore phased pay, as well as the ones that are on family leave or any other form of reduced pay absence. And note that the pay for any employees who fell within the definition of relevant employee on the 5th of April should be included in the report, even if they have left your employment by the time the report is published. Now, the next thing is to think about hours of work, to identify any employees whose hours of work fluctuate or who regularly work lots and lots of hours in excess of their contracted hours, but who don't receive paid overtime. Because should you be using a fair estimate of their average hours when you calculate their hourly rate? And if so, what is this? Do you have any records to justify using this particular figure if challenged? This is likely to be your more senior employees. It's likely to be the ones that haven't kept any records of their working time at all. So if you haven't got those, then you're going to need something to actually base your fair estimate on. And then we look at the definition of pay, because you may need to separate out some pay elements on your pay slips in 2 weeks' time to make the calculations easier. You might need to remove some payments, for example, overtime and pay arrears, from the total pay figure in that pay period to meet the definition above of pay. Are your salary sacrifice arrangements transparent on the pay slip? Because the figures that you should be working from for gender pay gap reporting is the salary after the salary sacrifice. And if you pay any monthly or annual allowances or bonuses that wouldn't have fallen within the previous snapshot pay period, but that now would, then consider whether you might wish to amend the payment date. And what I mean by this is we have clients who pay annual allowances at the beginning of each tax year for additional duties such as first aid, people standby payments, annual clothing or footwear allowances. Now, if these sort of allowances are paid predominantly to one gender, then you might wish to consider how these payments, even when you've reduced them to the proportionate amount, might skew your figures if they continue to be paid in the snapshot pay period. And finally, check any bonuses paid in the April pay period. We want those to be prorated so that they form a representative part of the pay data. And also note that you should include any payments made to those on reduced or no pay when you're calculating the mean and the median bonus payments. So you're going to have to go through the records of your bonus payments and delete any employees who've left your employment before the 5th of April. So a system that enables you to easily screen out leavers for bonus data, but not for gross hourly pay or quartiles, is going to be helpful. Remove workers and LLP members and partners from your list. Look at your provisional figures, check the hours worked to get an average gross hourly pay rate, and only when you have this can you identify your mean and median values. When you're looking at your differentials, now the Equality and Human Rights Commission considers a significant pay gap to be anything that is 5% or more. So is there a reason for these? Look to see why any differentials exist, either at location, departmental, functional levels. So it might well be that you're going to have to dig down deeper in your figures to actually find out, you know, where these things are happening. Yep. And look at your bonuses in particular. How transparent are your bonus schemes? Do they appear to favour one sex? This is a particularly key area that people are looking at, given that the national gender bonus gap is so high. So, first of all, are you going to publish? Take a considered view on this. Yes, it is a legal requirement, and we like to encourage best practice. But some of you will note that currently there are no real penalties for failure to comply. Now, it was initially suggested the government would name and shame those who fail to comply, but there are no legal sanctions at the moment for failure to comply. So, as I said earlier, it's more likely that you're going to encounter pressure from those who want to read your figures. So what are the implications and risks of publishing when weighed against those of not publishing? Is there any risk of reputational damage? How are your figures going to be viewed by your stakeholders, by venture capital providers, potential clients, customers, and also those for whom you prepare tender documentation? And if you tender for public sector contracts, you might well be asked for your gender pay figures. The data will remain on your website for 3 years. So should you publish anyway if you're close to the threshold in order to provide an unbroken set of figures? When will you publish? Once you have the bald figures, if you're intending to publish, then consider your timing very carefully. You have until next year to publish these, March if you work in the public sector. Yeah. So consider how the gender pay report will sit alongside other reporting obligations such as your annual report on directors' pay. Might it be better to publish these simultaneously, or is that going to be a red rag to a bull? Should you follow a similar format? Will you include your figures in a similar place on your website, and in which case are you going to actually want them to look similar in the way that they're presented? Will you want to time your publication to either just before your pay review process or afterwards, beforehand, especially if you intend to take any steps to redress any imbalance? Or might that just really set alight an already sensitive situation? Do you want to be ahead of the game? Do you want to get your figures out before your competitors, especially if you're quite large or you have a noteworthy name and that may result in positive media coverage? Or might you want to wait and then include a comparison if yours are better than theirs? Do you belong to any trade associations or membership bodies that might be planning to publish figures for the industry or sector as a whole, and who might actually be publishing best practice case studies? In which case, do you want to be one of their examples if you're one of the good ones? So thinking about when you do it is quite important, and also thinking about how you will present the data is also important. Should you add any narrative that further explains the figures, and if so, what might it contain? Now, this really is not HR so much as the PR exercise aspects of this exercise. A lot of readers are likely to misunderstand your figures. So if you feel, for example, that your gender pay gap may prompt a rash of equal value claims, then should you really be including something that clearly explains the difference between equal pay and the gender pay gap? Because the two, as I've explained earlier, are very, very distinct concepts, but many employees will not understand this. And it's inevitable that many will consider any form of gender pay gap suggest to them that women are receiving less than men for doing the same or similar job, rather than seeing it as an illustration of where the women sit within the organisation structure. So should you also explain how you reached your calculations, especially if there are any grey areas such as average hours or excluded workers? What questions are people going to be asking about your figures? Are there any positive points that should be emphasised? Or do you have any areas of imbalance that you're attempting to redress? And if so, do you wish to explain the causes of this and your action plan and the steps taken so far? Because if you have, for example, recruitment difficulties in certain areas, and your gender pay gap may present you in an unfavourable light to the very people that you're trying to attract, then should you be explaining your statistics? And what I'm getting at here is, let's say, for example, that you've deliberately recruited lots of women at a junior level as management trainees. Now, that could actually increase your gender pay gap in the short term because you've got more women earning a lower wage, but it will affect the top pay quartile as they progress upwards in your organisation. So if you've done that, might it be worth putting it into context by highlighting the significant areas of underrepresentation and what you're doing to address this? And if you work in an area where actually traditionally there is a big gender pay gap, then is it worth including a comparison with other employers of your size within the same sector? Especially next year, because next year, don't forget, everybody's figures are going to be readily available for comparison because you can go onto your competitor's website and look at them. Should you cover any companies in your group with less than 250 employees, or should you actually cover everybody? Yeah. And do you want to add any extra breakdowns if you do have particular imbalances, showing the location or age or part-time status or pay grade, but explaining how these skew your figures? And will you put pay ranges on your figures rather than just percentage differences? You don't have to, but you might want to. Or might it lead to increased risk or a feeling of injustice amongst those who feel that they should be earning more? So start to think about the narrative. How are you going to present this information, and what other supporting data you might want to include? You're not required to provide anything apart from just the basic figures, nor are you required to spell out any steps that you're planning to reduce your gender pay gap. But it does seem likely that some employers will want to do so, especially those who work in sectors where the gender pay gap is high, and the government is encouraging this. Again, if overtime pay, as we've said, is excluded, if that's a significant part of remuneration, then you might actually want to include that. You might want to look at sector data. You might want to think, who is going to be examining your data? What do you need to explain to them so that they can see your figures in context? So think, will you publish? When will you publish? And how will you present the data? And will you include any more information? Now, I would say that you need a communications plan for this if you are going to do it, starting with the senior team who need to own the data. Yeah. Then we need to ensure that managers actually understand it and that they're briefed prior to publication and able to answer questions from their team members. So you might want to consider briefings or FAQs. Get them to help you in terms of letting you know what their staff are likely to ask and what they're going to want to know, so that you can actually think of your answers and be prepared in advance. Brief any union or workplace representatives, again, before the data goes live. It's not worth cutting people off at the knees by expecting them to be able to respond to what your employees have read in the media. And finally, brief the employees and then the media if appropriate. Now, ACAS does have on its website a useful template for employees, but the amount of detail and the way in which you communicate this information really should be in line with your other employee communications, because that's going to be a lot less alarming than introducing a totally new form of communication. So if you have team briefings, include your data in this. If you have an employee newsletter, add a separate article. Look at the makeup of your workforce and work out the best way of explaining figures like this to them. Think about the experience you had in terms of explaining auto-enrollment and pensions. Yeah? Do you have lots of different nationalities who may well struggle with the distinctions in the concepts, or different levels of numeracy amongst your workers who might not actually understand the difference between mean or median hourly rates? Yeah? How will you present the report? The regulations simply ask you for percentages, but I think that most people are going to prefer to add something a bit more graphical and user-friendly. And do this either through face-to-face briefings or a video presentation or handout. And then finally consider the media if appropriate. Then going forwards, keep an eye on your competitors, how well you compare. Yeah, what are people doing? Keep an eye in the future. Consider any steps to redress any areas of underrepresentation if you have this, and consider an employee survey or employee focus groups to identify the cause of any underrepresentation before you start to think about any suitable actions. Now, if your figures are good, then use them to promote a competitive advantage. Publicize your data. Use the data in proposals, especially for public sector quotes. Use it in your recruitment material and promote yourself as a good place to work. Develop some case studies to support this. If your position isn't good, then you've got to say, well, how can you improve it? Now, if you want to do more to narrow the gap, then first of all, it would be sensible to put somebody who is suitably senior in charge to take responsibility for gender diversity. Set some targets for the roles and areas where you clearly have underrepresentation and publish details of your progress against these. Look at your recruitment. You might want to consider positive action under the Equality Act. That's where you have key posts where you have obvious underrepresentation, and you decide that if you have two candidates who are equally skilled and you really can't choose between them, then you would use positive discrimination on a case-by-case basis when you have two equally qualified candidates, but one happens to come from an area where there is underrepresentation and the other one doesn't. Positive action like that is not generally speaking very popular amongst an awful lot of people, so do think carefully, but it is something that employers will be doing in order to redress imbalances. But something that a lot more people will look at is reviewing training data and processes and looking at development schemes, mentoring, apprenticeship type schemes, that sort of thing to address the issues. Also looking at their working arrangements, particularly at management and supervisory levels. Might flexi-time help to accommodate childcare and school times and enable you to recruit skilled workers who've got to meet other family commitments? Women aged over 40 are the most affected by the gender pay gap, and women aged 50 to 59 face a 27% gender pay gap. Now that's only going to change if action is taken to address the root causes of them. And the government did some research and it found that the key causes of the gender pay gap were the part-time pay penalty and the fact that women take a disproportionate responsibility for childcare and other forms of unpaid caring. And they also tend to work in low-paid sectors such as care, retail and cleaning. So have a look at your working arrangements and see if there's any way around offering more flexibility there. Have a look at childcare related benefits. Might you enhance payments for shared parental leave, thus encouraging its take-up amongst all of your staff? Carers, still predominantly women. Do you have a long hours culture? Is it a barrier? Look at your competitors to see what they're doing, and also look at any sector bodies, for example the financial services sector, where the gender pay gap is 39.5%, now has a voluntary code called the Women in Finance Charter, and the aim is to get more women into senior roles within the financial services industry, so have a look at those. There is a government report called Closing the Gender Pay Gap, which looks at what some employers are doing and the business benefits of that. So in summary, you need to start working on this if you haven't already done so. View the Gender Pay Gap initiative in the overall social context of the drive towards transparency and the requirement on employers that they publish far more non-financial information, and that the government is increasingly using social media, pressure groups and naming and shaming to drive cultural change rather than legal penalties. The regulations are very detailed. The final section commits the Secretary of State to reviewing the rules within the next 5 years, and it may well be that they are simplified at that stage, but clearly at the moment we do need to comply with all of the extra bits that have been put in. Now, just before I go, because we're talking about pay, a reminder, national minimum wage increases on the 1st of April, and the national living wage goes up to £7.50 an hour. Yeah, that rate is whatever is applicable at the beginning of the pay period. So if you pay monthly and someone's 24 at the beginning of the month and has her 25th birthday on the 15th of the month, they won't be entitled to the increase until the following month. But keep an eye on ages and budget accordingly. Next month also increase in the statutory rate, statutory sick pay and family pay. And we now also have the increases in compensation limits, the limit on a week's pay, the maximum basic award for unfair dismissal, that also goes up as well. So we would like to give you more guidance, so do call us if you have any queries on this, and do actually let us know if there's anything in the scope of this webinar that you weren't clear on. Yeah, and basically, I haven't got time to take questions now. We're 2 minutes short of the deadline for finishing this webinar, so timing is very good or very bad, depending on the way you look at that, but thank you for staying with me all of the way through. If you do have any questions, please do send them to us, and thank you for listening.